I'm Bryan McNee, Senior Bond Analyst for MBS Authority, reporting for MPA TV. Let's take a look at what happened last week and what's on the agenda for this week. Last week, mortgage-backed securities sold off 182 basis points. You look at this chart, you can clearly see that downward trend. Remember, as mortgage-backed securities sell for less money, that means there's less demand for them and mortgage rates rise. As mortgage-backed securities sell for more money and there's more demand, then mortgage rates decline. You could clearly see mortgage rates rose on this situation. In fact, we hit the second highest rates of 2013. Our highest rates of the year were July 5th, but we just barely missed that this time around. In fact, not only do we sell off 182 basis points from Monday's open to Friday's close, if you look at the width of the entire trading session, we dropped 239 basis points from Monday's highs to Friday's lows. So that's a big sell-off. Now, we had a ton of economic data that hit the wires. Retail sales, PPI, CPI, all of these reports are very important, but they came in fairly close to market expectations. They didn't show a big miss or beat on either side, so it wasn't a shock to the system. Initial jobless claims, the weekly initial jobless claim number, were much lower than expected, and that added fuel to the conversation that the labor picture is brightening. Now, why this is important is because the market is clearly focused on when the Fed will begin to taper. Keep in mind, the Federal Reserve currently purchases $85 billion worth of treasuries and mortgage-backed securities. Mortgage-backed securities are the only component that directly impact your rates. The idea is sooner or later they'll move from 85 billion down to a smaller number per month. That's called a taper. That's what the market is trying to figure out, is when will the market adjust fully to the Fed tapering? And that's going to be very key. So as that labor picture brightens, the speculation mounts, among traders anyway, that the Federal Reserve will elect to start tapering as soon as September of this year. And as that sentiment grows among traders that that'll happen, you have pressure on mortgage-backed securities, which gives you higher rates. You know, even on Friday, we had economic data that would normally be good for rates. That would be a strong non-farm productivity report and a weaker than expected consumer sentiment index out of the University of Michigan. But those didn't move mortgage-backed securities at all. The pressure clearly was from the concern over tapering and strength out of Europe. As their economy grows and strengthens, why then there's less demand for the foreign U.S. 10-year Treasury among them. They want to put their money back to work in Europe. So those are the factors that are pressuring pricing. Now let's take a look at the economic calendar for this week. As you can see, we have big blanks for Monday and Tuesday. There's no major economic reports that will be released to impact mortgage rates. Take a look at Wednesday, though. Wednesday, the key, we have existing home sales on Wednesday, and probably the other most important report of the week will be Thursday's initial jobless claims report. But other than those reports, what will likely move mortgage rates this week are not going to be economic releases, but events. And we start Wednesday with the FOMC. That stands for the Federal Open Market Committee. This is the big Fed meeting that they always have. And this is the minutes from that big Fed meeting. What will the minutes say? It gives the traders sort of more of a detailed look behind the scenes of some of the discussion that the voting members had. Now, over the past couple of weeks, we've had a lot of speeches by Fed presidents from their various districts, but not all of them are voting members. So the key is, what kind of discussions had the voting members had before the last Fed meeting? Let's take a look at that. That could really drive pricing in the afternoon on Wednesday. And then Thursday and Friday, we start the Jackson Hole, Wyoming symposium. And what that is you have a lot of central bankers and economists from around the world coming together, and traders will be focusing in on discussions on who will be the next Federal Reserve chairman in January, and what about the timing of the Fed taper? Will it be in September or will it be later on in the year? Currently, the market has somewhat built in, but not all the way, folks, that the taper will occur in September. So any speeches by any central bank, key personnel, or chief economists on what their expectations were can really shake the market. So really look for some volatility Wednesday, Thursday, and Friday as the market tries to bet ahead of the next FOMC meeting, which is September 18th. Going to be very interesting. Have a fantastic week. This is Bryan McNee reporting for MPA TV.